Testing, testing.
Hello, hello. Can you hear me?
I can hear you. Can you hear me?
I can hear you.
Cool. Let's go.
Whew, what a week it's been.
Truly. I'm Alex.
And I'm Emily, and welcome to What a Week.
You want it, we got it. We're bringing you news by zillennials for zillennials.
Let's dive right in. Okay, so this week we can't stop talking about GameStop, and we can thank Reddit for that.
Yeah. Mm-hmm.
So stocks for GameStop skyrocketed this week, in part because of a Reddit stream called Wall Street Bets, who told investors or people who were a part of the stream to invest in GameStop, so the stock would go up super, super high. And it just everyone was talking about stocks. Like, people are like Gen Zers, like, we're talking about stocks, and like normally they don't give a fuck about stocks.
Yeah, I know. It's so wild because it's like, I never see, like, I see some people here and there on Twitter say like smart financial things. Like, I actually downloaded Robinhood, the app, which, if you guys know, Robinhood was very, like, everyone uses
Controversial this week.
Yeah, very controversial this week. But I originally got Robinhood like maybe 3 weeks ago because someone on Twitter was like, you should invest in like cannabis companies because they're down right now because of the pandemic, and they're just going to shoot back up like after the pandemic. So I literally started investing like 3 weeks ago because I was like, okay, this tweet said to do it, I'll do it. And clearly I'm very driven by tweets because this whole week made me invest even more.
Yeah, it's kind of crazy. I started investing last year in March because right when the pandemic hit, everyone at my job was like, we gotta invest in the stock market. Like, the stock market's like doing bad right now. And I was like, and so my friend from college, who actually, my friend Tony, who made the song for the show, was like,
yes.
oh, you need to use Robinhood. And I was like, okay. And he like helped me figure it out. And it's like, yeah, it's so great. But now everybody's talking about it and about meme stocks and like meme stocks. And just like GME and Nokia and like all this stuff. It's kind of funny because it's just like the memes that are coming out of like me trying to learn everything about stocks right now, or like Wolf of Wall Street.
Totally. And I know this one isn't as like, okay, so you guys, I have to tell you because I'm like into cryptocurrency. Like, I don't know what that means, but basically, because like everyone's talking about GameStop and everyone's talking about like all these different ones, which we'll talk about a little later. We have a guest coming in, but it's just like the one that people are talking about, but it is not mainstream yet, is this one called Dogecoin.
Yeah,
And so
I've heard about it.
It's a huge thing on Reddit. Like, people make memes about it, whatever. And then I saw a lot of people tweeting about it. So I think I first heard about it because my boyfriend's friend's dad was making like a bunch of money on Dogecoin, like the day that this all went down with GameStop. So I was like, okay, I guess I'll like invest in it. It was 2 cents at the point that I like put money into it, and I watched it go up to like 8 cents. So I was like, oh my God, like if I took out my money, like I'd make a profit. Now I think it's going back down again. I don't know, but it's like, apparently it's like a huge meme. And that's the thing, because like what I didn't understand about stocks earlier that I understand now is it's so driven by like us. Like, the reason stocks go up are because of us getting them, you know, like, which is, I didn't understand. Like, I couldn't.
In part, yes. Cause there's also like business decisions. Like, if Disney comes out with a new Marvel movie, their stock's going to go up, like, or parks closing, whatever. But yes, it is also like, which is part of the reason why the GameStop stock, it's so hard to say GameStop
because it's stock. Like, there's too many things.
Yeah, it's like, it's too much. But that's part of the reason why that stock went up, because everybody on Reddit was like, buy this stock so we can screw over the hedge funds, which we'll talk about soon. And now the stock is like $300 when it was like $10 a week ago. Like, it's pretty insane.
It's so wild. So first of all, before I introduce our guests we're about to have, I just want to say, everyone invest in Dogecoin or Dogecoin so my money can go up. We can all win together. Anyway, but now we are not finance people in the slightest. So we had to bring in an expert to talk more about what happened, and to break it all down, we are joined by Alfonso Barrajas. Okay, so thank you so much for joining. We're so happy to have you here. So if you could explain it as simply as you can, like we're 5, what happened this week?
Sure. Thanks so much for having me on. So at its simplest, what happened was there was a ton of speculation surrounding specifically the stock of GameStop, which is the video game retailer. This first was recognized by Michael Burry, who is the investor who became famous in the movie The Big Short because he correctly predicted the crash of the housing market in the United States back in 2008. So in September of last year, he kind of identified that GameStop was undervalued, and he published a letter. At the time, it was trading at, I want to say, like $4 or $5 a share. It closed this week above 300. And it started this month around $17 a share.
Wow.
That's insane.
There were a lot of drivers behind this move. Primarily, it involved the recognition by Michael Burry and some pretty smart users on Reddit that the stock of the company was heavily shorted. So shorting refers to a type of investment strategy where, as opposed to the normal thing where you're wanting to buy something with the expectation that it'll increase in value in the future and you can get more money for it later, when you short something, you are predicting that the value will go down. And the way this works is by borrowing. So to use something that's a little bit easier to understand, suppose that I believe that the price of oranges is too high and it's going to come down. I go to my neighbor and I say, let me borrow that sack of oranges in your kitchen. They say, sure, I want, some oranges next week. I take that sack of oranges, I go down the street corner, I sell it for $10. I now have $10 and I owe my neighbor a sack of oranges. If I'm correct and the price does in fact go down, I can then go to the store and I can buy a sack of oranges for $5. I pay my $5 out of the 10 that I just made. I put $5 in my pocket. I go back to my neighbor and I give them back oranges. So what happened in GameStop is the float, meaning how many shares are available to buy or sell, was shorted by over 100%, meaning hedge funds had borrowed more than all the oranges that are actually available. So this was recognized, and a ton of retail investors started buying up shares of GameStop, driving the price up, because those people who sold it short don't have a choice whether or not they have to buy it back. They owe people those shares, and depending on whatever their requirements are, the interest rate that they're paying, when they want to cut their losses, they can have a little bit of leeway. But the fact of the matter is they are going to have to buy those shares back later to give them back to the people they borrowed it from.
So can you explain a little bit more? Because we see on like Twitter where people are like, don't sell your GameStop stuff. Like, we can all be rich together. And you see like this talk about how like all of us are kind of the ones getting screwed over, whereas these millionaires or billionaires keep becoming billionaires. So who are these people? Like, who are the hedge fund people?
Sure. So a hedge fund in general terms is simply a partnership of investors where they give all their money to one person, the fund manager, for that person to then make all investment decisions of the fund, and that person gets to collect a fee for their services. So we all went to college, we all had roommates, right? Suppose that one roommate was the best at grocery shopping, and you and all your other roommates, you know what, I don't want to go to the grocery store. We're just gonna give we're gonna just give that person all our grocery money. They'll go to the store once a week, they'll buy everyone's groceries, and then because they're doing the work, they get to keep some of our grocery money for themselves. That's how hedge funds work. The difference is that regular people like you and me we're not allowed to invest our money with hedge funds. Government regulation makes it so that only what are called accredited investors can invest their money directly with a hedge fund. And the requirements are you either have to have a certain level of assets, right, a certain amount of net worth, or you have to have a certain income per year that would then make you an accredited investor. The other main source of money for hedge funds is what's called institutional money. So when people talk about institutions, they're talking about entities that have a ton of cash on hand, but they need to have it for later. So things like insurance companies, right? Allstate collects your insurance money every month for your car, your homeowner's insurance, all that stuff. But they don't just get to spend it or pay salaries with it, right? They need to save it for later in case someone's house burns down or they get in a car accident. So what they do is they take that money, they invest it around, they put it with hedge funds, some of it, right? They put it in different places, and hopefully it grows so that whenever those payouts come around, there's money to pay it out. The other big thing is pensions, especially public pensions. So people, teachers, 403Bs, things like that. There are what's called allocators. So they're the people at the pension funds that make a decision about how that money is allocated to the different financial advisors that could invest the money.
And so, question for you, is it basically like the reason there's like regulations so that only like people that have a lot of wealth can invest in these hedge funds? Is the logic, well, they have more money to risk, like you and I just can't be a risk, because it's a risk to do hedge funds, right? Because they're basically betting that the companies are going to do bad. So they're like, I don't want Emily to invest the $50 she has in hedge funds because she could lose it all and not have any money. Where like rich people have a little bit more to invest because they have more money. Is that the logic of why we can't be a part of
the
hedge funds?
regulations?
Yeah.
I believe it's somewhat, it's a little bit simply. So yes, hedge funds, the difference between a hedge fund and a normal, what we could be called a mutual fund or an ETF, is that hedge funds can basically use any strategy they think is appropriate, and they charge their fees. And as long as people sign up for it, it means they agree to it, right? I mean, you could be a hedge fund manager and say, I'm going to use a Ouija board and cast tarot cards to pick my stocks, right?
Jesus,
and there's
yeah.
nothing stopping you other than the fact that you probably wouldn't get many investors to give you their money, right?
Yeah.
Whereas mutual funds the strategies are a lot simpler, right? I'm trying to match a benchmark. I construct a portfolio. So you and I can go and put our money with a mutual fund or a company like Vanguard, which just uses passive investing. But yeah, that's basically the idea, is that
Got it.
Hedge funds have riskier strategies. So you need to have more to be able to lose in case those strategies don't work out. The term hedge comes from the fact that they are playing both sides, right? Think about in like regular sports betting. If I put money on a Padres game, right, and they win, great, I win money. But I could also do like, well, I think the Padres are going to win, but I can hedge my bet by making a second bet that, well, if they lose by this much, then I get paid out either way, right? And that's what the term hedge in hedge fund comes from, is the fact that they have more complicated strategies for their investments.
Got it. So a lot of people on this Wall Street Bets subreddit were using Robinhood to invest and to buy stocks. And so on Thursday, Robinhood told its users that they couldn't buy certain stocks for AMC, GameStop, Nokia, BlackBerry, Naked. They told them you can only sell them, you can't buy anymore. Is this legal? Has this happened before? Like, how does Robinhood come into play in this whole situation?
Yeah. So first, let me start that it is absolutely legal for Robinhood to restrict the trading in any security they deem appropriate. Not just Robinhood specifically, but any brokerage who thinks that a certain company is too risky and they don't want to touch it can prohibit that trading. Personal example, I interned at Merrill Lynch when I was in college. I was a finance student. And part of their requirements for all employees, including interns, is that all your investments have to be maintained with Merrill's brokerage so that they can monitor your activity to make sure you're not betting against your own clients or the company's clients. And at the time, I had some shares in some small company. I can't remember what it was, but it wasn't a very high quality company. And I'm a student, I'm getting ready for my internship. I moved my brokerage account over and I got a call and they told me, we do not support this company. You can't keep these shares. You also cannot leave your account somewhere else. So you sell them or you find a different internship. The kind of the backlash about Robinhood restricting the trading is that it was very sudden. The other thing that's very important is the fact that Robinhood's business model is predicated on selling its users order flow to hedge funds, right? So in the old days, not so common anymore, but at the time, you as a client of a brokerage would pay what's called a brokerage fee every time you wanted to make a trade. So you would put in the order, you would give them a commission for brokering the trade for you, and that was it. Robinhood kind of revolutionized it, and a lot of these other fintech companies did as well, by offering its users $0 fees. So how do they make money? Well, they make money by selling their users' order flow to what are called high frequency trading hedge funds. And how that works is, say, Emily, you want to buy a share of a company at $20 a share. So you put in your order on your Robinhood app on your phone saying, I will pay $20 for this stock. Robinhood then sells the fact, the knowledge that you will pay $20 for that stock to a hedge fund. Specifically, Citadel is one of their big customers. Citadel is a hedge fund. They have millions and billions of dollars. They have much faster computers than you. They have faster wiring. They actually will go out and pay to lay down new fiber optic cable to the computers at the stock exchanges, so they get faster trades by milliseconds. After you hit submit, they will put in an order for $19.99 and whatever many millions of a cent. They will buy it, and then they'll turn around and immediately sell it back to you for $20. So they basically made, fractions of a penny risk-free in under 1 second.
Little shits.
Wow.
And it's very small, but if you multiply that by, millions of transactions per day, it quickly adds up. There's a really good book about high frequency trading by Michael Lewis called Flash Boys. If anyone's interested in learning more about it, it's very accessible. You don't need to be a finance person to understand it, and it kind of breaks it down. So the reason why that matters for the event of Thursday is that here's a thing that you were always allowed to buy before, and now all of a sudden you can't buy it. And the reason why it plays into a lot of the backlash is the fact that one of the hedge funds that had heavily shorted GameStop, Melvin Capital, was backstopped by Citadel, who is one of the hedge funds that pays a lot of money to Robinhood. So it looks like coordination, right? I cannot speak authoritatively. I'm not a journalist. That's just how it looks to users, right?
Mm-hmm.
Because
pretty sketchy.
We know that Citadel pays Robinhood money for its users' order flow. We know that Citadel gave a bunch of money specifically to the hedge fund that was heavily short GameStop, and now Robinhood is no longer letting its users to buy shares of GameStop. I will say, after the event of Thursday, the CEO came out, not just at Robinhood, but a couple of other brokerages that also restricted trading. And they essentially came forward and said, we don't have enough money to settle these trades. So what that means is when you buy shares through a brokerage, the brokerages are all competing. And there are these neutral institutions, they're called clearing houses, that actually they're kind of like referees, where they deal between the different brokerages and they settle the trades. And usually they only take 2% of the cash to settle the trade at the time the transaction is processed. And your brokerage is the one actually putting that money out of their own pocket, right? And the activity around GameStop and some of those other companies like AMC, BlackBerry, was so violent that the clearinghouses were concerned that when the dust settled, they were not going to be able to pay everyone the cash they were owed. So they raised the requirements on all those brokerages that they need to increase the level of cash that they were putting to clear those trades. That explanation does make sense. But again, as I just explained with Citadel and high frequency trading, that doesn't remove the appearance of wrongdoing. And that's not to say that either case is true or not. That's just, the facts as they are now.
Right.
Yeah.
So now, what's next? What's next for these meme stocks? Do you think the stocks for AMC, Nokia, BlackBerry will continue to go up? Or now, since people can't buy them, is it everyone should just sell? How's that going to look in the future, do you think?
It's hard to say. What I can say is I would not expect the shares in anything not named GameStop to continue or to have a move as violent as what happened in GameStop. As explained initially, right? With the short squeeze, GameStop had been shorted so heavily, right? Over 140% of the float was shorted. That means someone had borrowed all the oranges that exist. AMC, BlackBerry, they're heavily shorted, but it's only about 25, 40% of the float. That's still very high, but it's not to the degree of where there are no shares available, right? Far be it from me, I'm not a financial advisor. I can't tell you if the market's gonna go up, down, or sideways tomorrow. But what I can say is the mechanics behind GameStop were very, very unique, and I don't think we're ever gonna see them again. I think what happened is pretty substantial, and I think a lot of hedge funds on Wall Street that may be engaged in this sort of activity before are gonna be very concerned. It's remarkable, right? When you talk about shorting, one thing you have to understand is typically with investing, you can only ever lose as much money as you paid, right? If I paid $20 for a stock and it goes to $0, I lost $20. If it goes to, infinity, I've made however much that is less $20. When you short a stock, you can only ever make however much you sold it for. So if I short a stock at $20 and it goes to 0, I can only make $20, but the price can go up whatever amount. So that hedge fund, Melvin Capital, had been heavily short GameStop at, $5 a share. I think as of at start of last week, it was like $20. So for every share they sold short, they only made $20. So is it worth it once you short to a certain degree to keep your short going to squeeze out that last penny? I think we're going to see a lot of funds recalibrating their level of risk taking, especially on the downside.
Do you think the FTC is going to make or put even more regulations in place so that this doesn't happen again? And do you think if they were to put more regulations, would it affect everyday investors like us, like people who use Robinhood or Fidelity or whatever?
Sure. I think we'll definitely see either the FTC, the SEC. Everyone's going to be looking into this. What I will say is that what happened is pretty unique. Robinhood specifically allows its users a degree of leverage that is not uncommon, that is not common compared to other brokerage firms. So you mentioned, TD Ameritrade, personally I use Merrill, right? Most other brokerages, if you want to take risky behavior, right? So trading on margin, meaning when you borrow money in order to buy stocks or options, they either require you to have a certain level of assets, right? You have to have a certain amount of money in your account or a certain level of experience, whether that's education or professional experience. And they all have their own rules about it, what they allow for their clients. Robinhood was pretty unique in the sense that they didn't ask anyone to do any of that. They had what was called Robinhood Gold, where if you paid a monthly fee, I think it was something like $10 or $15 a month, regardless of how much money, they wouldn't do any kind of vetting. They would just give you the ability to trade on margin and buy options. So I think that's why you see a lot of this on people using Robinhood and not so much on other brokerages, just because the brokerage's internal rules, they mitigate their risk in a way that's different from how Robinhood did its business. There's been a ton of politicians coming out and trying to ride this, populist wave, because it really does feel for most people, right? Like it's us, the little people, against the hedge funds, and they're changing the rules on us. Elizabeth Warren is pushing her transaction tax. We'll see. I don't know. This is pretty arcane stuff. I don't know. I wouldn't be able to say how it would look and how those regulations would affect retail investors.
Yeah, but you're right. It kind of did feel like these people have been doing this game or playing this game for so many years, and now that people on Reddit were outsmarting them and screwing them over, they're like, wait, no. And it's like, you've been doing this for years. It kind of just was just frustrating to watch, but it was very entertaining as well.
And I think so that phenomenon, right, where basically people are short a stock and then are forced to buy it at a higher price, driving the price higher and higher, is called a short squeeze. And there's been a ton that have happened. I want to say in the mid 2000s, famously, there was a short squeeze engineered by people at Volkswagen. So
I heard about that.
Right. So the Volkswagen stock was heavily shorted, and they were able to generate a similar event The difference was that was, you know, people at a company against hedge funds, and there wasn't the level of, you know, common people on Twitter, on Reddit discussing it, right? It was relatively constrained to just people in the financial markets to talk about.
Yeah.
Whereas what happened in GameStop, you know, you have people's grandmas, they're seeing it's on CNBC.
Yeah.
And it's but as far as short squeezes, like a short squeeze, that's what happens. That's the risk you take, right? And there's this feeling that, you know, you're a hedge fund, you take risks. Why are you changing the rules? And it looks that way. Is it the clearinghouses? I'm sure there will be congressional investigations, and we'll find out more.
Yeah, but I will say this: it was really great to watch like random ass people on Reddit with the weirdest freaking names being like saying like we're screwing over these hedge funds, and it was like their usernames are like potato something. It's like so funny.
Oh yeah, absolutely.
Thank you so much for joining us and for breaking all of this down. I feel smarter already.
I know. Sure. I'm like, let's go. Let's go to maybe not Robin Hood. Let's go to Merrill.
Yeah. All right. I feel so much smarter already.
Yeah, like infinite times. Like now I finally understand.
Yeah. But now let's talk about our good stories of the week. So Alex, do you want to start?
Yeah. So I have shopped. Like I've been just looking for things to do, right? And I feel like a lot of times like I haven't been shopping just because I'm like, well, where am I gonna wear the things that like I'm gonna have, you know? But I shopped. Okay, and this is obviously not sponsored, but I would love for it to be. But Nordstrom's Rack is like my shit, I feel like. Like I didn't know that Nordstrom's Rack was, I thought it was like expensive the same way that Nordstrom's is, which things are expensive. Like there are certain things, but it's like I got this shirt for $15. I got a Free People shirt that's like so cute for $30.
I love Free People. I love
right. And I got Steve Madden shoes, which most of my shoes are Steve Madden. I love Steve Madden, but I got which they're like over $100 typically for a pair. I got a cute pair of little heels for $17. I'm like, what the heck? Like, who knew Nordstrom's Rack was doing things?
Yeah, I like Nordstrom Rack. There's like a really good one in I remember there's one in San Diego in Mission Valley.
Yes.
Yeah. Oh, I love a good Nordstrom Rack. They also have makeup, and like some of the makeup they have there is pretty good.
Yes, I know. I love stores. Like I didn't realize it was like a TJ Maxx kind of. Like it's like nice. And I love TJ Maxx.
It's like a higher version of TJ Maxx. I feel like it's Nordstrom Rack, TJ Maxx, Marshalls, Ross. Like the order of
I agree with this completely. Well, how about you? What's your good news of the week?
My mom's birthday was this past week. Yay. So we did a little thing for her. I got her like flowers, and we got her like a cute little vegan cake. She's not vegan, but I just wanted to, like, she's pretty healthy. And so it was really good, like vegan cake from like a local bakery. And I made her food, and it was just like really cute. My dad and I like just like hung out and we danced. It was cute.
Oh, that's fun. I love that. A pandemic party, but you can still do it. You can still do it safely. I love that.
Exactly. And now let's read some of your good news. So we have one from Jack, which says he got his public records that he's been waiting 2 years for. And those, honestly, most of you guys have probably never taken public records out, but they're such a pain in the ass to get back. So I'm happy for you.
I know. We're very happy for you here. And then Stefan said, we had snow and it was lovely, which I'm jealous. Like it was hailing here and I was like, oh shit. But I think snow would be nice.
Yeah, snow would be kind of nice. And then we have two more. One of them is from Kristen Rivas, who said her best friend Pam got her dream job of hers and she's very proud. So that's, yes to dream jobs. Like that's freaking awesome.
Awesome. I love that.
And Dominique said she started working out for the first time in months. Love that for you. Love that.
I love that. That's awesome. Oh my God. I was sore this week because I worked out. I was like, because Jack has a 20-pound dumbbell and I used it, which I that's like heavy. I was like, oh shit. And I was like,
heavy.
Like, I tried doing this things. I did like squats with it. I was sore the next day.
Oh, good for you for doing squats with it. Kelly and I, our friend from college, Kelly, she's like Apple Watch competition queen, and we're on this like 1 month workout challenge where we're supposed to like do certain stuff each month, and she like honestly whips my ass every single day. It's like noon and she already like closed all her rings, and I'm like, bitch, I'm
There's no way. I think I competed against Kelly once and I was like, never again. Cause I like to win and I'm like, it's impossible. Like there's no way I'll beat that.
You can tie though. I tie with her all the time. But it's just like, I literally work out all day. Like when I'm not like during work, I'm like standing and I'm like doing like squats or like leg lifts. Cause I'm like, must beat Kelly.
I know, I hate that. I only take on competitors that I can beat, like my boyfriend, my friend Megan. That's it. I'm like, I remember Dr. Nate, who was on this podcast, the Selena episode. He literally was like going to the gym like twice for 2 hours a day, like literal burning like 3,000 calories a day. And I was like,
and you're like, I can't.
I'm not doing this anymore because I refuse to lose. So I just abstain. That's my strategy.
Well, thank you guys all for joining us so much this week. I hope you learned some things about stocks, meme stocks. Hopefully you invest some money. Don't go buying GameStop anymore though.
Dogecoin, I'm telling y'all. Let's win together.
I'm not endorsing that.
Well, thank you. Oh, you
don't forget
us on Instagram and Twitter. I know, I'm like, we're all over the place. You guys, what you don't know behind the scenes is we've had to record that interview 4 times because the computers kept freezing. So if you made it this far, just know we took 3 hours to get here. That's dramatic, 2 hours, but still.
And thank you to Fonz for the technical.
Thank you. So you can find us on Instagram at What a Week Show, and then you can find us on Twitter at What a Week Show _, TikTok What a Week Show _, and you can find us on YouTube.
What a Week with Alex and Emily, and we also have a book club.
Oh yes. Oh, my book's not close, but yes, we have a book club.
Yes, we're reading this wonderful book this week. Such a Fun Age by Kylie Reed. So make sure you sign up for a book club. We're going to meet at the last week of February. So we're going to leave the link to sign up in the description of the YouTube. And you can also find it in our link tree, which you can find on all of our socials. So have a great week. We'll talk to you next week. Bye.
Dogecoin. Mwah.
Damn it.